Good morning, Wall Street winners. It is Monday, September the 9th, and it's a bit of a muted week, but we've got a lot of ancillary events on the go. And because we are coming out of what was a pretty bad week last week, where the S&P 500 was down just over 4% for the week, which is a big drop. We've seen now a mild correction. And mild corrections, although they can be painful when holding stocks and looking at your portfolio, are actually really good for the market because sometimes the market gets overheated and it needs to pull back in order to get up to that next rung on the ladder or that next level of growth. So let's take a look at where we are today in the futures. And the good news is everything is in the green. So if you were smart and you had the conviction last week to buy on the dip, buy during the correction, doesn't mean that you did it at the right time. You might have bought on Tuesday and that would have been a bit of a mistake. It would have been early. Maybe you bought on Friday and that would have probably been the best time to buy. But if you had a bought last week, then you're probably sitting in pretty good shape to make a profit for the week or the remainder of the year, depending on your position. So we are up across the board here in the futures. If we flip over to the Yahoo Finance app, one of the articles that just popped up in front of me talks about the cell phone wars or handheld device wars, whatever we want to call it right now, phone wars, mobile phone wars. But Huawei, the Chinese manufacturer, has just racked up 3 million pre-orders for its new phone, and Apple is about to announce the iPhone 16 today, hoping to get some pre-orders on that. So we'll see what happens with Apple stock. I believe it's up pre-market. If we look across the board at the top here, we've got crude making a bit of a recovery, which is good, seeing it down in the $68 range. I really can't believe that crude is going to remain this low for much longer. So I think we've reached a bottom here, and we should see oil stocks and oil refining stocks and crude related stocks all start to make some decent returns and recover going into the remainder of the year. If we move over to the futures there, we can see the NASDAQ is up, and then the VIX. So the VIX is above 20, but it looks like it's coming down pre-market. So if it does come down and start to get back in the month of September, if we get back down into the 15, 16 range for the volatility index, I think we'll be in good shape going into October earnings. And this whole correction has kind of set us up nicely for some positive October earnings. So we've heard a lot of rumors in the last week about a possible recession and the Fed cutting too late. Now, everybody's been wanting the Fed to cut. Now they're saying things like, oh, if the Fed cuts, it means recession, just really changing the narrative up to the negative. And we're just going through a normal economic cycle here. So the thing that we could get stuck on September 18th around the Fed is the size of the rate cut. There's a little bit of concern that if they cut half a point, that it'll show that the economy is in a state that requires a healthy, larger rate cut, and that becomes a concern to the market. Whereas if they cut 25%, it's that everything is actually pretty good and it's just a normal rate cut. We'll probably see another 0.25% or 0.25% rate cut before the end of the year again. So who knows, really? I mean, do you want to start and get us down to a more reasonable long-term rate and then have less cuts? Or do you want to just have more smaller cuts? In the end, we're going to arrive at the same number, and it just depends on how we get there. So I'm not sure how the markets are going to interpret that, but that is always something that can cause volatility within the markets themselves. If we look at our stocks, so let's go to the app, look at health and retail. Overall, it looks green across the screen, except for a couple of health organizations. They're not down that much in the red. I think they'll probably turn green as well. We've got some recovery here. We have, I believe it's Dollar Tree reporting this week, so we'll keep an eye out for that. We'll take a look at the earnings coming up this week in a second. Dollar General got beat up. A couple of those dollar discount stores got beat up. I would be staying away from these going into earnings. So we'll mention that a little bit later. Walmart has held up well. So Walmart here at 76.64 held up really well. Remember that after earnings this quarter, it popped up to 73. It's now at 76, which is another 3% gain, maybe a little more. It's gone up to 77. I think it maybe even touched 78, and then dropped with the rest of the market last week. I think a solid buy going into the fall and winter, or at least the end of this year, would be Walmart. So that would be one that if you're looking to deploy some capital and you want retail, I would look to Walmart. They're doing a lot with AI and taking advantage of that, and obviously they've got a really strong position in the market. I would be staying away from transport, so we'll ignore those. Oil should be in for a bit of a bounce today, upwards, should be a rebound. I mean, if you look at Valero is down from 100 and I'm going to say 75, that range, down to 134. That's a $40 drop. So this would be a great stock to get in on. Exxon, above 120 recently and down in the 112s. You've got Chevron. Chevron was $154, $56 stock within the last month or so. It's down to 138. You've got a lot of opportunities here. The other one for relative stability is Con Ed, or ED, ED, the symbol, and it's under 104 right now. That could be an interesting purchase. I'm staying away from Con Ed right now. I think it's got a little bit room to drop. But if you're looking for something that you want a good dividend from, this is certainly a decent dividend stock at 3.21%. But I think you've got some other alternatives out there. You can see that crude is up 80 cents, so we should break through into the, call it low to the 69, maybe even up to the $70 range today, depending on how things go. Then we get down into tech. And in tech, we have earnings coming up shortly for Micron. So Micron reports in a couple of weeks. I believe it's September 25th. We'll confirm that in a second. They're at a steep discount right now at 86. I think that one of the things coming out today that we'll want to watch is Oracle. Oracle announces after the bell today, and if Oracle's earnings are solid, I think it might set the tone for the week in tech stocks. And that could be very good because we also, later this week, have Adobe coming out on Thursday with its earnings after market. And this is a stock that has climbed quite a bit over the course of the last 3 months, really since the June-July period. And I think we're going to see this stock this week get up into the high 500s, maybe even across and into the low $600 range. So if you're looking for something to move on earnings, I would definitely look at Adobe. And one way to play that potential earnings pop, especially coming out of a big correction week where pops can happen more often, would be to look at buying calls, which are an option that allows you to purchase the stock at a price that you select today and pay a premium on to buy it at that price at some date in the future. So let's start from the bottom and roll our way up. So we've got Adobe coming out this week. I think Google at 152 is a steal. NVIDIA down, call it 30%, from the 130s down to 102 is a steal right now. I would be, and I'm going to be picking up some Adobe at that price. I think Meta right now in the low 500s is a super steal. So if you can get that, that's going to be a $550 stock when it announces earnings come the October-November Q3 earnings period. Oracle is probably going to have a bit of a pop when it announces aftermarket today, which will be good for the market. Lam Research, this was almost $900 stock within the last couple of weeks. It is now down to $733, looking like it's going to make a positive move today. I think we're going to see this stock hit $1,000 before the end of the year. Workday, another solid stock. It got hit a little bit. I'd be staying away from Workday even on that dip for now, because I do think you have some other better alternatives. ARM looks like it's going to make a positive comeback and a move today. Microsoft down in the 400 range is a steal of a deal as a longer term hold for a tech company. And then you've got CRM down at 243. These guys had great results. I think this should be and will be a $280, $290 stock by the end of the third quarter. So you've got a little bit of runway there. And then Micron, when it comes out with earnings, I think it's going to pop as well. Let's go down to financials. So where I really like opportunities is in financials. We've seen a lot of pullback in financials thanks to last week. And if we take a look at SoFi, SoFi is down at $7. This is a stock that is a must buy today at $7 because it's going to go back up to $8, and that's a huge percentage return. So I would definitely be looking at acquiring some SoFi in the $7 range today. And then down to JP Morgan. JP Morgan was in the 220s. I thought it was too expensive at 220s, said I'd wait for it to come down. I like it in that 210 range. I'm going to wait to see if it comes down any further, and I will definitely be picking up some JP Morgan if it drops under 210. Morgan Stanley down at under 97 is an absolute steal of a deal. Morgan Stanley, Goldman, JP Morgan are the first to report in early, call it mid-October. I think the first announcement is JP Morgan on the 11th of October, if I'm not mistaken. And these stocks are going to do really well. They're all positioned to do well, especially with the coming rate cuts. That's going to help these companies. And seeing Goldman down under 380, I've been buying into Goldman recently. I think it's going to be a $550 stock by mid-October. And Morgan Stanley should be up around 106 by that same period in time. Let's take a look at what we have in terms of the events calendar. So we've got Oracle reporting after hours today. We've got Dollar Tree on Wednesday. I would stay away from Dollar Tree. And then Thursday, we have Adobe reporting after hours. And then next week, we've got AutoZone. I'd be staying away from that. And then Micron on the 25th, which is next Wednesday, a week Wednesday. And I believe that's going to take off when we hear the results from that. Now, in between all of this, we've got September the 18th, and that's when the Fed is going to talk about and announce a rate cut. So it's there's not a lot going on the calendar, but definitely some things to be aware of. And that's where we are today on September 9th. So good luck with your trades. If you're liking these videos, please subscribe to the channel.